क्या नानू?
What?
हर महीने नया इंटरेस्ट, लास्ट मंथ पॉटरी, इस मंथ डीजे।
अरे यार, अगर हर महीने इंटरेस्ट मिलता रहे तो हर महीने कुछ इंटरेस्टिंग होना चाहिए कि नहीं? क्योंकि मेरा बैंक जो है वो मेरी तरह, सॉरी तुम्हारी तरह है, यंग एंड फ्रेंडली।
आपकी तरह।
एंड फ्रेंडली।
आपकी तरह।
Right, good evening everybody. Namaskar, Allarigo, Bangalore here. Welcome. All right, on behalf of IDFC First Bank and the Economic Times, welcome to the ET Startup Awards 2023. Excellent wish to Mr. Chandrasekhar. As always, I'm your host, Suresh Venkat. We're here tonight to celebrate the most acclaimed startups in India for the year 2023. But before we do that, as always, let's do a little stargazing, shall we? Right, let's rewind a couple of years. NFTs, anybody remember that? Remember, the world's most famous crypto bro who famous to take Dogecoin to the moon? No? Well, he didn't pull that off, but India managed to reach the moon with Chandrayaan-3 and win 100 medals at the Asian Games. Can we have a round of applause for that? Right, next up in the year, we had an EdTech founder who achieved astronomical heights. I'm not naming him, but he even went to the Akash. But when it came back to paying his borrowers, he went deep underground. Meanwhile, influencers continued influencing, buy this, eat that, invest here, do this, do that. Elon Musk, tired of boardroom battles, decided to go into an actual battle with Zuck in an actual cage. Notice the use of the word actual here. You might also notice that the ET Startup Awards is at the Leela Palace, Bengaluru. Just take a look around you. Can you hear any ACs? No, no. Can you hear me on stage? Yes. Can you see me on stage? Yes. Now pull out your phones and tell Trevor Noah that there are venues in Bangalore where people can actually hear you and see you. Leela Palace instead of, what is it called? Manfo Convention Center. All right, if you're feeling a bit of chill in the room, that's because that's the funding winters here. Right? But don't worry, all is not lost. We have a new unicorn in 2023. They're here with us. We have a revival in funding fortunes, which of course means all VCs have stopped saying growth, growth, growth. They're saying profit, profit, profit. Unit economics, unit economics, unit economics. They're saying all those things now. Let's put all that aside for a moment. At the ET Startup Awards, we present to you the 8 bright sparks of the Indian startup universe. Startups that survive the odds, the funding winters, summers, all of it, slowdowns and crashes, they continue to survive and thrive. We'll tell you more about that in a little while. Before that, a quick word of thanks to our sponsors and partners. Our presenting sponsor is IDFC First Bank. Our workspace partner is IndiCube, our knowledge partner is Traction, telecast partner is ET Now, and hospitality partner is the Leela Palace, Bengaluru. If you'd like to go social with today's ceremony, then use the hashtag ET Startup Awards. With that, let's begin. May I first invite the Vice Chairman of Times Internet, Satyan Gajwani, to say a few words. Satyan.
Thank you, everybody, for joining us today. Thank you, our Honorable Ministers, Sri Rajiv Chandrasekhar and Sri Piyush Goyal, for joining us as well. I jokingly tell them this is their event because they are mainstays at the ET Startup Awards. Thank you to our winners and all of our esteemed guests for joining us. The Economic Times Startup Awards began in 2015, and 8 years ago, you take a look back at how things have changed, it's pretty remarkable. At that time, we dreamed of a vision of one day having 10,000 startups in India. Today, we have over 1 lakh startups. Cumulatively, the startup ecosystem in India has raised over just about $100 billion, and we have over 100 unicorns resulting out of this. Now, as we know, it's not all roses, and the last year has demonstrated that it's not always that easy to scale up. And yet, at the same time, I think it's brought out the best of our ecosystem, because leaders who were earlier pushed to grow, and worry about profitability and sustainability later are now put in a position where they have to demonstrate the ability to build real, lasting, sustainable, and responsible companies. And ultimately, the companies that come out of it will be stronger, weather-tested, and better as a result of all of it. You know, it's pretty funny. For me, I'm very lucky because I get to attend both the Economic Times Startup Awards, but also the Economic Times Awards for Corporate Excellence. And you know, 5 years ago, when you would attend both of these events, there was a very interesting vibe between the two, because you'd go to the corporate events, the Corporate Excellence Awards for traditional companies, and they would look at startups sort of like the way parents look at children. They're like, oh, it's very cute, these are nice companies, valuation, this, that, but they're not real companies. And they have a long way to go before they can actually be something that will last. And the Startup Awards were the opposite. They were the children. They had this rebelliousness, sort of like a teenager that would say, these old companies don't get it, we're gonna change the world, the future is the way we're gonna build it, and we're gonna be the disruptors. And in the last year, there's been this interesting convergence of the two, because the young companies have grown up, and they've had to demonstrate that they can build real, lasting, responsible companies. But more interesting than that is that the traditional companies have started to recognize the relevance and give real respect to the startup ecosystem. As we've seen startups not only go public, but after going public, weather challenging public markets, demonstrate paths to profitability, and build lasting, strong businesses. Today, more than ever before, we see traditional companies seeking to imbibe the spirit of entrepreneurialism, of disruption, of challenging the status quo, of using new technology, and reinventing themselves. So today, this event is about celebrating startups and celebrating the winners of this year's awards who are growing in new ways as well. But I think this event is actually not just about that, but it's really about celebrating the spirit of entrepreneurialism and the spirit of challenging the status quo. And what makes me excited and proud is to see that what started as an event to celebrate these young companies is now celebrating a spirit of change that affects not just the new age companies, but the overall Indian ecosystem as a whole. So please join me today in congratulating our winners and celebrating this spirit of entrepreneurialism.
Thank you, Satyan. May I now invite Surabhi Agarwal of the Economic Times onto stage. And to speak with Surabhi on all things technology and startup, may I invite Mr. Rajiv Chandrasekhar, Union Minister of State for Electronics and IT, and Skill Development and Entrepreneurship. Surabhi, Mr. Chandrasekhar, the floor is all yours.
Hello and welcome everyone to the ET Startup Awards. Rajiv, big welcome to you. Thank you so much for joining us once again. It's always such a pleasure talking to you. Rajiv is probably one of the rare ministers with whom you can discuss the complexities of what goes inside a semiconductor chip and at the same time talk about probably the latest fad on Instagram, of course on a very, very rare day in his very busy life. So Rajiv, I'll probably start by saying that maybe 10 years ago, even maybe 5 years ago, when it came to products that were built in India, the acceptance was very low. People smirked. They were considered low quality, subpar. That seems to be changing, right? Recently, Apple, a company like Apple, which is supposed to be very, very close, said that they'll be adopting the NAVIC chips, which is alternate to GPS. They're sort of leading the way when it comes to adoption of NAVIC chips. Google is making Chromebooks in India. Micron is setting up a chip packaging unit. Chandrayaan, of course, will open opportunities that probably are unfathomable. What is changing? Where do you see this going from here?
So, Surabhi, thank you for having me. And it's becoming a nice habit to come to the Eco Times Startups Award. Satyan said something in his opening remarks, and I think you can take a cue from that. There was a little skepticism, there was scorn, there's a little aberration, this whole phenomenon of young Indians building these companies and startups. And there was a lot of that. I can safely testify to that. There was a lot of that in the political and government ecosystem. There was a lot of that in the existing legacy technology companies. But over the last 5, 6 years, if there is a defining outcome of what we have done and what is now evident, is that the confidence amongst the world's investors, consumers, companies, enterprises about the capabilities that this generation of entrepreneurs bring to bear is unquestionable. I think that is the big leap that has happened. And it's not just about consumer tech, it's not just about D2C, it spans the entire spectrum of what we refer to as the digital economy today. And you will see such high quality, deep work that is being done in every one of those areas. You take it as AI, the Web3, the consumer internet as you know it, semiconductors, microelectronics, sensors. Every one of these areas today has deeply capable startups and young entrepreneurs at work. So I think that is it. The pedigree, in a sense, of India's capability has been firmly established and in a lot of ways reset from the old narrative that we were the back office. We are certainly today in the league of, and the Americans sign the ISET agreements with us, where the EU signs the agreements on semiconductors with us, when the Japanese sign agreements on electronics and semiconductors with us. I think the world now recognizes that the future of technology will certainly be shaped as much by Indian entrepreneurs and Indian minds as the Americans or the Japanese or the Koreans or the Europeans.
Sure. Like you said, that there's been a reset. There's optimism all over, there's euphoria, there's opportunity. But at the same time, many of the startups are struggling. We saw what happened with the gaming decision, 28% GST. Similarly, probably crypto also went through a similar sort of a setting where the 30% tax was put on them. While India has been very progressive when it comes to not banning these emerging areas or emerging technologies, but taxing sectors to death is something which is emerging as a concern. I was at a panel recently and one gentleman got up and he said, all my peers in the crypto space are dead. I'm moved to Singapore, but I'm shutting shop. So what would you say to that?
No, so I was hoping that I would not have this question asked. So obviously that hope has been shot. Look, I've been an entrepreneur once, and many here have been or are entrepreneurs. And you do realize that as you stray into areas that are unregulated or where the clear framework or guidelines are not visible, you can see that as an opportunity and then go full hog and then develop something because everybody else is afraid of coming there. Or you can wait for the framework to evolve. Now, what has happened, particularly in the online gaming space, is certainly that there was a free-for-all for several years. There was no framework. And therefore, there were some good actors that have essentially milked that lack of a framework, and there were bad actors that are there were bad actors that sort of milked that lack of framework, and there are good actors that really went and innovated and created these beautiful companies. Now, we are trying since the 7th of January of this year to put together a framework that will define what permissible online gaming is. We did this very successfully. We ran this through a consultation process, and over 4 months, we have created a framework that we believe is an extremely sound framework that lays out what would be the playground and the rules in that playground for all real money playing online games. Now, there is a lag between how my ministry and part of the government is doing this and the other parts of the government that have been, in a sense, become gun-shy because of the episodes of the past and the bad actors. So I can just safely tell you today that there is a lot of effort going on in harmonizing every ministry and every view, especially the finance ministry, where there has been a strong view, given the bad actors in the past, that GST should be punitive, and it should basically discourage online gaming because there is a lot of badness associated with it. We have explained where we are going. The whole of government is very interested in making sure there is a clear, predictable framework for online gaming innovators and startups. And I'm very confident, I say this with a great deal of confidence, that you will soon see that the framework has been implemented and there is an all of government consensus on that. And it'll be the sunrise again, if you want to call it that, for the online gaming sector.
I'm sure that will be very comforting to a lot of people in this room. But you spoke about harmonization of the government on policy frameworks. After probably you took over as MOS, we've seen a spate of policies in the digital space. I want you to talk to the audience on how should they read it. Right now, there are so many policies on the digital sector. Let me name them probably: Digital India Act, the Digital Data Protection Act, the Digital Competition Act, Telecom Bill. TRAI keeps coming up with papers on how to regulate metaverse and things like that. There's this threat of probably AI regulation looming. So how should people interpret that? It's becoming very hard for startups to navigate this. The big companies have the lawyers, like you keep saying. But what about the small guys?
First of all, let me clarify today that there is only one act, which is that we have passed, which is the Digital Data Protection, Personal Data Protection Bill. And that today sits with the IT Act. So there are only two legislations that are at work here. And if you're a startup today, you just need to be worried about these two legislations. Now look, we all know that digitalization and the effect of digital technologies is across board. It is impacting the entire economy, and therefore, many parts of the government will respond to this very differently. So the Telecom Bill was one effort. There is a Digital Competition Act which comes from the Competition Commission saying, look, we are worried about the openness of the digital space, anti-competitive behavior that some of the big tech companies are demonstrating. So all of them will initiate this. But I can certainly tell you with absolute clarity and authority today that this will all finally get harmonized as an all-of-government approach. There will not be a case that there will be a Digital Competition Act, then there'll be a Digital India Act, and there'll be a Telecom Bill, and there'll be 4 other bills that will create havoc for the startups. Our Prime Minister has a clear-cut view and has certainly given this as an instruction. Our legislative process, our way of making rules and laws will be to catalyze and further accelerate our innovation ecosystem, not to create roadblocks. And it is certainly not going to be any government or any part of the government's effort at all to create even a small road bump. You know that we spoke about this in the DPDP context. And a lot of people said, no, but this is not GDPR, it is not ABCD, it is not EFG. It is because it is not GDPR precisely because we want all of our legislations and rules to be enabling the ecosystem and further accelerating it and helping it grow rather than creating difficulty, road bumps, and hurdles in terms of innovation growth. So I wouldn't worry too much about the news coverage on this. I'm sorry to say this in an ET startup event, but I wouldn't worry too much about it. I think finally there will be a Digital India Act, there will be a DPDP, and there will be some elements on the competition law that will be amended, which will effectively deal with the distortions on the internet that some of the big tech platforms tend to demonstrate and tend to bring because of the sheer size of the presence. And for our startups, we certainly want to make sure that these big platforms don't come in the way and become elephants that sort of create hurdles and create an uncompetitive landscape for our startups.
Sure. Thank you so much for that answer. Unfortunately, you said road bumps, and I'm going to interpret that in the literal sense and ask you, what is your reaction to what's happening in Bangalore? We've all heard great weather, bad traffic, but now with Trevor Noah roasting us on a global platform, Bangalore is your city.
Look, this is the other question I was hoping I would duck, but look, I'm a member of parliament. This is my home. This is my city. I love this city a lot. It has done a lot for me. And I think successive governments have been unjust to the city. And I will just leave it at that. Unfortunately, a lot of governments have a tremendous presence of real estate and contractor vested interests that drive the government's priorities. And the victim has been this beautiful city. So look, I am as aggrieved about it as you are. If not, I'm even more aggrieved about it. There have been many, many attempts to create an agenda of, governance, urban governance, and creating a much more citizen-first approach to development in the city. Many people, I see some people in the audience who have volunteered time and effort. A lot from the tech community have done that. But we are where we are, and it is what it is. And I'm sorry I can't give you a much more optimistic answer. And certainly not with the current government. Certainly there's no cause for any optimism anyway.
Well, that was coming. I'll pause here now and probably take some questions from the audience. Can we please have the mics? Kunal, I guess you had a question.
Hello, sir. In terms of the growth that we are looking for the country, we are doing well on all metrics except one metric, which is female participation of labor. And it seems to be a declining trend, female participation of labor. And urban one is even more declining quite in a steeper manner. I think if we have to grow our per capita income to 2x with one gender participating, it's not going to happen. So is there a government initiative? Because we did the education part, but that did not cause employment and participation. I mean, just to give you some data points, like 95% of all financial assets, credit cards, loans, everything is just men. When do we see the government kind of participating and doing something about it?
Look, I'll say two things. I'll answer this in two ways. One is, of course, the space that I have the privilege of being a minister in both IT and electronics. The women participation is in the ballpark of 48 to 49%. So it is very high, especially in the tech and the electronic space. Some of these cutting edge factories that are today manufacturing devices that are being exported to markets all around the world are 75% women. So I can safely say that the space that I am involved in is certainly very highly represented and well represented by the women of India. But our government's approach to this has been fairly horizontal and has been very deep and structural. So we've looked at empowerment of women on one hand with the Women's Reservation Bill, but leading up to that, we have really created economic empowerment. I don't know how many of you know, but there are over 4 crore Indians, women, 4 crore Indian women, that's 40 million, that are beneficiaries of PM Awas Yojana, who have gone from zero asset to having an asset of 2.5 lakhs in their name. So I think this is a process because 65 years of this type of negligence, we have, in the last 8-9 years, significantly moved ahead on that. Are we perfect yet? Certainly not. Do we have women fighter pilots and women combat soldiers and women represented in every part of the government? Yes. Are we happy with where we are and can we do more? Of course. Do we have enough women MPs? No. Will the Women's Reservation Bill mean an 18-year-old girl today in college or a 19-year-old today can look at public life as a realizable, real opportunity for herself? Yes. So I think we are certainly on the move. We are not there yet. But I think we are making all the right moves in terms of getting more and more women into leadership positions, both corporate and in politics and public policy.
Sure, thank you. All right, this side, please. Please identify yourself. Please stand up.
Good evening. Thank you so much for giving me an opportunity. I'm Rahul Gupta, setting up a fund called Valuable, where the idea is to mainstream inclusion. Rajiv, for the last 2 days, I was at the IIT Madras campus, where the Empower conference was taking place. And to our delight, we saw 400 assistive tech startups being there. It's a country, well, of course, the latest census has not happened, but it's estimated to have 210 million persons with disability, where we are now talking about seeing them as a consumer, which potentially has a large estimated income. Globally, persons with disability are estimated to have a disposable income of $1.9 trillion. So it's clearly not a space to be missed out. Kudos to the government that today government platforms, including the eGEM platform, is completely accessible. But it's important that we have the right act, and enforceability of that act is critical. As I was just walking up from in this hotel, it was painful to see that an infrastructure which is owned by a Canadian major is not accessible. So it's important that we don't let people take these things for a ride. We strengthen the structure, and startups. In some way, these assistive tech startups that are today there are given more room, and potentially one of the ways could be having some sort of a carve out in terms of priority sector lending or something where they are encouraged more, and these people eventually could be mainstream. Eventually, everybody has to age, and age will not see any gender diversification or caste, religion, and anything. But these things will eventually happen. So it's just a request to think a little more through this, and if you have any ideas.
Certainly, I completely agree with you. And I just want to add that, for example, in our skilling ecosystem, there is a lot of work that we are doing, and there are a lot of skilling programs that we have developed, especially for the Divyang and for the differently able. So there is a complete curriculum that has been developed and skill delivery for a lot of those who want to join the skilling ecosystem and who are unable to do so in the normal, regular ecosystem. So, but the essence of what you say, the spirit of what you say, I certainly get and agree with.
Thank you so much, Rajiv. With that, we've come to an end of the session. Can you please give a big round of applause to the Minister? Thank you so much.
Thank you, Surbhi. Mr. Chandrasekhar, I'm going to ask you to stay on stage for a little while longer to give away the first 3 awards. With that, let's get to giving away some awards. The first category is called Bootstrap Champ. The winner of this award is Gameberry Labs. With over 22 million active users, the company has built casual online games for the international markets, and they've exported one of India's most popular pastimes, Ludo, onto the global stage. May I invite the co-founders, Govind Agarwal and Afsar Ahmed, to receive the awards. Question for you. You guys help other people play lots of games. What has gaming taught you about real life?
You can check my phone. There are less apps, more games.
All right, I can check your phone. I'm going to take you up on that offer. Any embarrassing photos there? All right, okay, we'll find out shortly. I'll report after this. Congrats, Gameberry. Congratulations. The next award is called Best on Campus. So most of us who are grey-haired in the audience here spent our time on campus doing all sorts of random things. One of those random things was attending classes and learning some things. But Gen Zs and millennials, for them, campus is a place where they go to infinity and beyond. Our next winner is a startup that started on campus in a very complex segment. They were able to build a business in a high attention area that is seeing serious investor interest. The winner, ladies and gentlemen, is Digantra Research and Technologies. May I request Anirudh Sharma, Rahul Rawat and Tanveer Ahmed to come up and collect the award. Now, Anirudh, Rahul and Tanveer, if I'm not mistaken, your startup is going to help clean up debris in space. You map debris in space so somebody else can collect it. What are you going to do about the debris in Bangalore?
I mean, this is a tough question to answer, but we're solving things for space right now.
All right. Congratulations, Digantra. Our next winner is the award for social enterprise. This award goes to FIA Global, a platform that helps people in some of the most remote areas of the country avail of formal financial services. From opening a bank account and taking a loan to investing in mutual funds and buying digital gold. Seema Prem, the founder of FI Global, was unable to make it here today. Company CFO Madhusudan Gupta will come on stage to receive the award. Sir, I imagine you spend a lot of time in remote parts of the country. Most of us live in a bubble called Mumbai, Delhi, and Bengaluru. What's going on in the real world?
Well, we believe that to serve unserved people who are there in the rural side, that is the real financial inclusion. So for that, I think we are taking all these steps possible to reach out to them and to serve them.
All right, excellent. Congratulations, FIA. Mr. Chandrasekhar, thank you for doing the honors. Please do stay with us. Right. I see many famous faces in the audience, as is our tradition in the ET Startup Awards. We're going to do a little, I can't say the word ragging anymore, so I'm going to say the word trolling. We're going to troll some people in the audience. I'm going to get off stage and get a sense of what's going on, get a mood of the house, if you will. Right, let me see who we can target. Right, what is the matter with you? At this age, you're doing a startup and a unicorn?
I think you don't know about my age. So
how old are you? 14?
42 into 3.
All right, excellent. Kunal, people have been asking this question year after year. How does credit make money?
I think this answer will, this question will remain forever, no matter what our numbers are. And I think it's at least keeps us in the news.
All right, excellent. I see Ganesh and Meena here. How do VCs romance each other?
I'll let Meena answer. She does most of the romancing, so.
Thank you, but there is no romance in VC.
Where is the love? Where is the love? All right, we'll get back to the audience in just a little while. But before that, let's get on with the show. All right, I now invite my colleague, Samida Sharma, editor, Startups and Emerging Business, Economic Times, to moderate this evening's panel discussion. The theme of this panel is the new order for Startup Inc., decoding the playbook for sustainable business. Let me now invite our panelists, Lalit Keshre, co-founder and CEO Grow, Prashant Prakash, partner Axel, Harshil Mathur, co-founder and CEO Razorpay, Adit Palicha, co-founder and CEO Zepto, and Rashi Narang, founder, Heads Up Hotels. Samida, floor is all yours.
Thanks. Suresh, I think you wanted to ask Adit that question.
No, he looks startlingly young. He looks as young as Adit. I'm going to ask Adit as well. Next round of ragging.
Thanks. Yeah. Thank you, all of you, for joining us here. So 9 years of the ET Startup Awards. We're almost hitting a decade now. Good time to kind of do a little bit of sort of looking back and looking ahead. So we're talking about building sustainable businesses and what's the playbook that Indian startups and entrepreneurs can sort of adopt. And we have a very varied set of people here. But before we start talking about business, I want to come to Adit, and you have to clarify for everybody in the room about this entire social media chatter about your age. Let's get that out of the way. And Prashant, don't feel too bad. You was veering towards profitable businesses which were not burning too much cash. And the winners are a testament of that, right, this year, and hopefully all of the years. You're a previous winner, last year's Startup of the Year. So tell us a little about, how have you sort of, how do you look at this new changed world as an operator yourself? You're a highly valued company. You're in a business which has a lot of regulatory pressures. There are competitive pressures. Tell us, how have you adapted to the new world?
Yeah, so I don't know why we call it a new world. Like, the purpose of business has always been to make money. I don't think
I
that's...
agree,
yeah.
but maybe Prashant doesn't feel like that, and a lot of VCs here, they keep changing their mind.
No, so I think what has changed, I think when we started the company like 8 years back, I think the purpose of business has always been to define how do we make money and how do we get profitability. And that was one of the reasons that we stuck very close to our core segment, which was B2B, because we could clearly see how do we make unit economics on every business, at every transaction, and so on and so forth. And I think what happened in somewhere in the 2-3 years in between was, I think I would say that was a distraction, and I think that was a new thing which came in and went away. And I think we are back to basics, which is talking all about how does a business make money, how do we make revenues. And I think all the discussions that we have in the startup world about growth in valuations and growth in other numbers and metrics and DAU and MAU, I think while they are good metrics to chase in the early stage of the company, as we get to later stages of the company, you have to start showing revenues out. And I think that's where, at least that's the way we have built our business. And over the last couple of years, as conventions have come back to unit economics and revenues, I don't think much has changed for us, because we were always focused on that. And to be very honest, I think I feel better about that today that is the prime driver of what makes a company successful versus what makes a company not working today.
So I think even Lalit, you can talk a little about, building sustainably. I mean, everyone has a point of view on that. When do you start pricing, your revenue, your unit economics, instead of the entire, and you guys are in the consumer-facing space, right? So when do you kind of hit that particular stage when you say, okay, we've got enough consumer love, now is when we kind of turn on, the profitability and the unit economics part?
I hope we could plan like that, like so easily, but a lot of things.
I mean, like this, that, you were also loss-making for the first many years. And you look like, you're not happy about me saying that. But at some point, you would have said that, okay, now is when, you need to make sort of the business sustainable on its own without raising capital.
So our thought process was slightly different. So in consumer business, one strategy that a lot of internet companies use is delayed monetization. So there are certain philosophical factors that you need to take care of when you start the company. Like, as you said, like, build a lot of audience and then build customer love and then start monetizing and so on. But there are some basic things before you do that, right? One is your business eventually has to be sustainable. So that means your operating costs, your customer acquisition cost, your customer retention needs to be very high, your engagement need to be very high, and of course your customers need to love you, right? And this is one way of course there are a lot of other ways, but there's one way of making consumer companies, right? Where you keep the business economies, like you have the foresight of that business economies would work. It might work. Basically in startup there is always a if, right? It might or it might not, but then that's how we kind of approached it, and we were lucky we kind of got that point.
But tell me about your own, at Grow, at this level, do you keep the pace of growth as a priority, or now that, and you have significant, profits, would you stress on being profitable and, sort of balance out growth, keeping that in mind?
Yeah, we balance, but growth is of course always more important in a startup.
Okay. I think, Rashi, you may have a very different point of view, right? You were bootstrapped for about, what, 7-8 years?
8 years.
Then you raised your first set of venture money. You were much smaller in scale. So how do you kind of, and I think over the last couple of years, I know Harshal is saying there's only one way to do business, but we see these cycles come and then, everyone forgets the basics of doing business, right? What came along with the venture money which you raised? Because you have a very long 8 years of not having raised any VC capital.
We've been around for 15 years, so we've actually seen some very interesting cycles. And I think when we were bootstrapped, we were doing so much more with less, as is the entrepreneurial spirit and sort of nature. We actually raised venture money just 2 years ago. So even when we had angel, we were still very conservative with the use of our funds, where we were focusing it. But I think the last 2 years, there was the only conversation and the only reward from the market was growth at all costs and top line. And I think that we went a little bit along that line, but I think we, as a company, we realized very quickly that this does not feel right. And we've always wanted to create a strong, sustainable company that lasts many, many, many centuries. And so I think that we've been able to, at that space where we've been able to turn around very quickly. And our only focus is how do we become profitable? Where does the profit pool lie? How do we change or come back from some missteps that we may have taken? And I think that's a great place to be in, because there's lots of lessons learned. But that venture money did allow us to experiment with a lot of new formats, new things, new products. It allowed us to grow much faster. It allowed validation when it came to hiring. So there were so many good things that came with it. And I think we just want to keep building on that.
I think that's where Prashant can come in. While everyone talks about all of this reset and being sustainable for companies, what is it that VCs have done in terms of a reset in the past couple of years? I know in sort of an ideal world, we all say that what Harshal was saying, but all of this FOMO does strike the venture community very quickly. So how do you kind of stay on with this, Prashant?
So, Samita, one perspective, we are still a very young ecosystem, right? So, 15 years, I'm quite a surprise you started almost when the startup ecosystem started.
15 years is a
15 years is a really long thing. So, I think we've not gone through too many cycles, both as investors. I'm not saying that we're all not smart enough, but we've just not had enough of an experience of these cycles, right? So, that's one. Second, I think we just overbuilt a lot of tech for many companies, which were not every company in India needed the kind of tech. I think we could have been a lot leaner and a lot more purposeful in terms of the tech that a lot of companies required.
You mean on the people side, like many people in the...
I think our tech teams were so bloated. I think we spent 3 to 4x the amount we should have spent on tech. Now, there are many businesses that are online that require platforms, that require a lot of tech investing. But every business does not require the same kind of investment in tech. And so we try to make every business an expensive tech first business, right? So that was one mistake. The second mistake was misalignment in the whole valuation ladder that builds in a little bit of misalignment between the investor and the entrepreneur, because there are these opportunities for secondaries, and of course investors can keep showing
about markups.
Yeah, markups, right? So because the investors can keep showing that the IRRs are going up, and the entrepreneurs have these opportunities to take secondaries, and those happen, and then I think there is a misalignment, because ultimately I think we all have to be aligned towards building these enduring, and by the way, that was multiple centuries. I mean, that was a very big, that's a really long thing, but even multi-decadal enduring companies, right? So nobody was planning for even 5 years, 10 years. People were planning for 2 years, right? So the misalignment from, what's one of the best things that India has? The public markets, right? We lost sight of what it is to practically build a company for the public market. Nobody put that right and center. So that's a shift, right? So that's it. And the third mistake was, I think, we buried the importance of somebody being an operator. I think it was about storytelling, it was about pitching, all those very important. I mean, there's none, I'm not taking away the importance. I mean, if it's a great entrepreneur who can pitch very well and be a great operator is, of course, always gold, right? But there are many operators who I think today now have seen the light of the day and...
But why were you falling for it?
I think, you know, it's, I mean, I'm not going to say everybody was...
I'm not individually,
yeah.
you
yes,
know, like,
but I think
larger...
it's related to FOMO and related to how we kind of get carried away at certain times, right? So that's the thing. And then finally, I think, you know, being practical about the spectrum of companies that you can build from India. I think every company aspirationally wanting, or the VCs, I mean, as in us, pushing them to 15 to 30,000 crore range, I think was a mistake. Yeah. I think there was a lot of great companies that could have been built in much more capital.
We're going to come back to that. You and I have been talking about this, I think, for almost a decade.
So, but the long and short is
we were 7, I think, at that time.
But the long and short is that it's still a young ecosystem and we are learning.
Yeah. No, I also think at some point we have to say that we are mature, or at least getting there, because I think a lot of it sort of gets pushed, you know, behind this whole thing that, you know, we are young, etc. But, you know, you are that 2021 company, okay? You came in right at the time when there was that entire exuberance. Tell me, how difficult has it been for you? Because you only saw that, and you started your company in 2021, got funded. Recently, you turned a unicorn. You must have done a lot of reset internally at Zepto. Talk us through that.
Yeah, and you know, to that point, you know, deeply resonate with everything that Prashant mentioned. So actually, counterintuitively, we're one of the very few, or I think probably the only at-scale consumer internet company in India that spent most of our lifetime in a bear market. So we started in July 2021. We effectively had that, like you pointed out, that 9 months of you know, peak euphoria. But then by March, April 2022, when the company was still very young, and our culture was still sort of in its formation phase, we had a very, you know, deep, you know, disturbance in capital markets, right? And from that point onwards, you know, especially because we were so young, it was very easy to mold the culture into a much tighter position or place, right? And there are lots of companies that started, if you notice, like in the US, 2007, or right before the crisis in 2008, that, you know, started in a little bit of a period of exuberance, but then, you know, very quickly were able to mold, and I think we were able to benefit from that. So, you know, being a 8-month-old company and then having to mold your culture in a certain way is a lot easier than being a decade-old company and having to mold your culture in a certain way, especially if you started, you know, in this period of exuberance that we had, you know, primarily from 2012 to 2021, right? And so you have that 0% interest rate phase, and there are lots of companies that, you know, for half a decade or a decade were exposed to those markets with very, you know, very minuscule breaks in between, right? I mean, you had maybe a blip in 2016 or a blip in 2018, but really uninterrupted euphoria. So we benefited from that. I think the journey of resetting, it was tough, but I think it was, you know, it's something that now is deeply entrenched in our DNA and will probably last for a very, very long time. And I think that's a little bit of an advantage. So yeah.
And how much of an impact is it on your business that you are in a sector which is, like, if you look globally also, it's pretty challenging. How do you kind of get that? How do you sort of do this differently, you know, to build sustainably?
Yeah, you know, I think it's a great question. Look, I think there are, you know, nuances on, you know, obviously the grocery dynamics.
The ministers joined us, Mr. Goyal.
But yeah, so, you know, I think there are nuances in, you know, the grocery dynamics in India that are actually quite favorable to our business, and happy to go into that in detail. But fundamentally, like, you know, Prashant mentioned, it is about operating excellence and execution, right? And that is, you know, the beauty of being in a business that's so execution oriented. It's the advantage and also the pitfall that 95 or 97% of our success is determined by execution and rigor internally, and only 3 to 5% of our success is external and macro oriented, right? At least today. Maybe if we become a very large company, then maybe it will matter more. But for now, it's primarily about execution, and that's probably the only reason why we were able to put our company in a good place in probably the worst sentiment for our space, and also one of the worst capital market situations in over a decade. But the bad part about that is, if you fail, it's on you, right? It's not on anybody else.
So you touched upon you being sort of younger company, and therefore the externals and the macros don't affect you that much. But because we have two ministers in the house, I will have to ask, especially because it's a little, there are two fintechs here. How much of predictability also determines sustainability for businesses like yours? Predictability in terms of policy making, regulations. Harshal, if you want to take that.
Yeah, so see, when you start in a fintech domain like us, regulation is like as important as the market is for any company, right? Like regulation is, we consider it as like market, like you can maybe try to change the narrative here and there a little bit, but most of it is driven by external factors and you have to build around it, right? So like an average company can't change the market, we can't really effectively change regulation, so we have to build around it. I think just the visibility around where that's heading helps a lot. I think a lot of times, at least in our kind of regulation, where most of the regulation is driven by RBI, what we have seen is that there's generally a little bit of visibility on where things are heading. And that discussion comes up in various ways, whether it's in discussions or speeches coming from various people in the regulatory ecosystem, to the small changes that happen, to actually most of the regulation that happened in the last 2 years has happened in a very consultative fashion, where generally there is a draft published, comments are asked, there's some roundtables that happen, and then based on that, some changes happen. As long as that approach is followed, I think it's easy to mold the business around changing regulations, because see, at least in our domain in fintech, we are quite, I think it's the reality that the ecosystem is growing very rapidly, and that requires regulations to constantly change and to control the risks that the market gets exposed to. So I think regulation will be the part of the journey, and we expect it to change further in the next couple of years. As long as that approach is consolidated the way it has been in the last couple of years, as long as that approach continues, it's not very hard to mold the business around it.
Prashant, you want to jump in and just talk a little about while for larger companies, the regulatory aspect is something that they can sort of deal with. How does it affect a lot of the very early stage startups? I mean, do they find this as a roadblock? Is it, is it as easy for them to come in thinking that, there'll be a lot of costs involved, etc.?
I think it depends on the space, right? So in fintech, I would say that there's been a lot more learning again from what's happened in the last 10 years. I think going in, I think a lot of startups didn't really think that they have to, be as diligent on following what the RBI is thinking, saying. So I think there's a lot more learning. So I would say that it's probably now a bit easier for them to know how to navigate. And that cost is not that much, right? So because there is a little bit of a playbook, right, there on how to do it. But, and even in gaming, I think it was clear, and I think the minister was talking about it, that, and this happened in e-commerce, right, when we started out, right? So it's part of, building when you have new sectors. It's the opportunity. Right, so both the investors and the founders get into it with that understanding that this is a white space because it's new and it's not traded before. So, but fintech specifically, I think now we'll see. I think a lot continued innovation, because I think people really know what to expect.
Lalit, you want to take that, because again, I mean, SEBI is your sort of regulator.
No, regulations have played a great role in overall ecosystem as well as, but specifically for us, we have been very lucky. So we started in 2016, and since then we have seen a lot of progressive regulations, and most of them have helped us grow. Like I can't imagine, let's say, starting grow, let's say 5 years before 2016, and so on, right? So user onboarding is possible because we have Aadhaar, KYC, DigiLocker, UPI. Customers can pay very easily because there is UPI. And there are like N number of things that have come up. So I think, so the timing, especially in the last 7 years, right, you see, has been phenomenal.
So we'll also just briefly touch upon sustainable valuations, because that's again something, and Prashant, I want to come back to that because for over 5-7 years, we've sort of always looked at very outsized, like valuations, too much focus on unicorns, etc. I mean, why is it that a 500 million exit in the public market is not priced as much as a Decacorn or a $15 billion public market debut?
No, I think it's starting to get attention that companies compound after IPO. And IPO is not and should not be the end event of when you think a company's value is determined, right? So I think the first round was about maximizing value pre-IPO. So I think that's not a sustainable way, aligned way. It's totally misaligned when you try to do it that way, because it's misaligned not only from the public market as a whole, but just getting new startups IPOing, right? So I think if you, and this was some statistic that I was just looking at, if you look at all the IPOs that have gone IPO and compounded over time, less than 1 or 3% or 1%, I mean some very small number, were more than 10,000 crores at the time of IPO. So what are we thinking, right? So why should every company at the point of IPO be 15,000 crores?
Point taken. I support that argument, but say Harshil's company is valued at 7.5 billion. The outcome of that company has to be more than the present private market valuation, right? If he goes and does an IPO?
I think that valuation is something.
Thanks, Amita. Thanks for setting the target.
I think it's a point in time number, right? And I think over a period of time, you have your bumps there, and you build up to that value.
So, are you ready to take a down round happily?
So we raised a round a couple of weeks ago, actually, at another down round. So that was good. But I think for us, it's again like deeply resonate with what Prashant just mentioned, right? We genuinely look at where we are today as this sort of milestone point on valuation, only unicorn in 2023, so on and so forth. It's a vanity metric. I mean, really what matters is what's your valuation a decade from now in 2033, 2043. And yeah, I mean, like for us, when we went out to raise this capital, we didn't really have a valuation target in mind. We raised this capital because we thought that the business had reached to a verifiable inflection point where there was really a strong use case for growth equity to accelerate value creation. Otherwise, we wouldn't have raised the capital, right? It was not about setting a benchmark or trying to take a secondary. It was not about any of that. And hopefully, even we're trying to be hopefully a company that goes public very early in our life cycle. We want to be public in the next 18 to 24 months, right? That's what we're going for ambitiously. So, 2 years from now, Adit Palacha promised XYZ did not happen. That's what we're.
Mind what you say here.
but we're trying for it.
Yeah, very fast. No, but that's great. So Rashi, just one quick one, and then maybe we'll do a quick wrap. So how do you view all of this? You're a sort of a D2C consumer company. the kind of crazy valuations that come with, tech startups is not typically what we see in the consumer side. How do you look at your business? Do you want to be like more focused, turn profitable, be a, 300, $400 million company? Or, I mean, what's your
really, that is definitely a question on the table. Like, how did you get a 20x or a 40x and we can get maybe a 5, 6, 7x, right? And you're still putting in the same amount of work and
a lot of tech is not needed.
yeah. So that's definitely, always floating around in conversation. But I think for us, we just want to be massively focused on building that strong, sustainable, profitable company that is just doing our absolute best for our customers. And I wouldn't put a cap to it at 300, 400. We are very ambitious, global ambition, want to grow as big as we possibly can, want to become the best pet company in the world. So I definitely don't want to cap it at that, but sure, I don't also want to compare with other sectors where it may not be comparable.
Yeah, sure.
Just one small point that I'll add there, right? To that point on building like large businesses, like, north of 10,000 crores or sort of these multi-billion dollar, 10, 15, $20 billion businesses. Although I agree, obviously, $500 million exit, $300 million exit is exceptional, top 0.01% of companies. But I think India needs large generational companies. Like we need Boeings and Lockheed Martins and Costco's and Walmarts. We need those sorts of businesses. Those businesses build middle classes, right? So if you have like companies that can, like in the US 100 years ago, can build sort of wealth in the 20th century, we need, and we have a few, but we need a lot more, especially like professionally managed businesses that are, singularly focused except conglomerates. That I think is going to be a marker of like overall value creation for India.
So just quick sort of round up, like if all of you here can just list out what you're chasing as a business in the next few years to be sustainable, to be profitable, to not burn too much cash. And Adit can start, yeah? We can start with that.
Sure, yeah, quickly. I mean, I think our objective is, hoping to be, again, aiming to be profitable in 10 to 12 months.
I'm not going to hold you to anything, yeah.
Just putting the asterisks for when the query comes in next year. But I think so we're aiming to be profitable in the next 10 to 12 months. Businesses continue to multiply year on year. And we actually don't think of it as a trade-off on growth and profitability. Most consumer businesses, before the word tech was introduced, they used to grow 30, 40% year on year and be highly profitable. Yeah. And so that's the standard. So we're trying to do that, get to profitability in 10 to 12 months and continue to multiply the business, hopefully cross 10,000 crores in sales in the next couple of months. So that's the objective.
We think that if we can continue building for customers, like if customers continue loving us, I think we'll be able to build a very enduring company. And I think in next few years, if we can set that as like a culture, as like, long sustaining, like a system in place, I think we'll be very happy.
We're still chasing growth, but healthy, profitable growth.
What does that mean?
Thinking about which channels work for us, not everything does. Thinking about unit economics, thinking about, optimization, warehouse structures. Do we really need to build? I mean, the conversation was always about, okay, building massive infrastructure that you grow into. Those things can actually drown you before you get there. And, more focus on our private labels, everything that makes sense. The cash flow, it's not about the flavor of the month. Is it e-com? Is it retail? We got a lot of slack for that, saying you're just a retail first company, not cool enough, right? For many years. And now suddenly it's like, oh my God, you're retail, that's so cool. D2C is it? So not focusing on what the flavor of the month is, but really thinking hard about where does our cash flow come from? What is going to be solid, healthy growth? And just chasing.
Yeah, of course, the primary objective is growth, and by growth, I mean growth in revenues and consequently profitability. And the way we drive it is that we are a product companies. For us, the prime metric is a product per customer. We are building an ecosystem of products for businesses, and the idea is as long as the number of products that we are able to sell to every business grows, and each of those products makes money, even though individual products margins might expand or contract with market forces and other things, as long as the number of products that we are able to put into a business increases over time, then our profitability and revenues grows with it.
Prashant?
So I think just a different perspective, just not on this. I think global macro is still very bad. I think for us as investors, it's really important to understand how capital flow is going to continue to build till we get to the point that the companies can IPO. And we just need to calibrate that capital flow with availability, with how fast we can grow, right? And I think there's a little bit of a tightrope game there that we have to help navigate, yeah.
Yeah, I think we will continue to watch this space. Next year will be, I think, as challenging, but hopefully all of you will attain what you're set to do. Thank you so much, all of you. Over to you, Suresh.
Thank you very much, Samida. I've got some feedback that every time I ask questions, I go only to the front of the house, to all the high-profile names, and that I ignore the back of the house. So I'm going to change strategy today and go to the back. Hello, Mr. Goel, how are you? Go to the back of the house. We see Rishi Das here. Rishi, if Bollywood made a film about startups, what would the film be called? Kabhi VC, Kabhi Gham?
A tough one. What did we call Meghna? Any guesses you want to make?
We'll come back to you.
Kabhi khiladi, kabhi anadi.
Kabhi khiladi, kabhi anadi. All right. Do we have any startup spouses in the hall here? Anybody who's a spouse of a startup founder? I know Sudha Murthy spoke about how difficult it is to be a startup spouse. So nobody is raising their hands. Absolutely no startups. Hello, Devita. How are you? No startup spouses? All right. Fine. We'll get back to the back of the house later then. All right, it's now time to invite Mr. Piyush Goyal, Union Minister for Commerce and Industry, Consumer Affairs, Food and Public Distribution and Textiles onto stage. Mr. Goyal, can we have you on stage? May I also invite Bodhisattva Ganguly, Editorial Director, The Economic Times, to engage with Mr. Goyal in a fireside chat.
So thank you, Piyush ji, for taking, you've been always very generous with your time for these events, and it's become associated with you in many ways. We're also, in a celebratory moment as far as the nation is concerned. We had crossed 100 medals in the Asian Games yesterday. We had a very successful G20 summit. There's obviously the Chandrayaan mission. So the mood is generally optimistic, but journalists have also been accused of being professional pessimists. So let me introduce a note of realism and ask you, startups, there has been, in the earlier discussions, there was talk of global macro being bad and, concerns about fund flow to the startup sector and indeed to other sectors. The term funding winter has become widespread. So are there any measures which the government has in mind to support the startup sector? India is the third largest in the world after Silicon Valley in China.
Well, journalists of late are accused of a lot of things beyond pessimism. But always a delight to be in this forum. It's something which I think has also become a part of my annual calendar. And this time around was getting a little close with my meetings in UAE. But I'm really delighted to be amongst all of you. Suresh is another permanent feature.
Yes.
So between you, Suresh, me, and some of your other colleagues, and of course Mr. Gangwani, all of us, Satya, and all of us have long association, and I really enjoy coming here. If not for anything else, the energy in your room is very infectious. Gives me a lot of confidence about the future of India. And congratulations to all of you, to all the wonderful startups for the work that you've done. And to those who are going to be recognized for the Startup Awards. I personally am not very concerned about the funding winter. There's always a reality check that is required after every few years. And I look at this period as one of those periods where our startups will come of age. We'll see a little bit of the churn in the industry. We already noticed from the conversation and the last question that was asked that cash flows and profits are becoming relevant finally, and thank God for that. And I think my own experience running a business, I wouldn't call it a startup in the modern sense of the word in terms of innovation or new ideas, but running a small industry at a young age, my experience is whenever you have too much cash or you're flush with cash, you tend to make mistakes, you tend to blow it off. A little tight-fisted environment in which you run your business is always going to be good for business. You'll manage it better, you'll control expenses, you'll be conscious of every bang that you get for the money that you spend. Right. And therefore, I think this little bit of occasional roadblocks will only help our startup ecosystem mature. Having said that, while government has a number of schemes, our fund of funds and credit guarantee scheme, we have also last year through the advisory council, of which I see some members here also, started the mentoring program. We've done the Investor Connect program. So in a small way, we've been trying to look at good opportunities, not missing the bus. But I think there's enough and more money for good ideas. My own meetings in UAE over the last 2 days, I got the impression that they're feeling let down. They're disappointed there's not enough investment opportunity coming out of India. They're looking for big and small opportunities. And of course, I have my age-old grouse against Indian investors and Indian industry, which at the cost of repetition, I will use this platform to see if someday somebody will hear me out. Maybe Vedi, you could hear me out on this. Ever since 2020, if I'm not mistaken, I've been appealing to Indian family offices, Indian industry, Indian business persons to consider setting up a homegrown fund, which is financed primarily by Indian money, Indian investors, to be able to support the startup ecosystem, particularly at the early stage, where I find that our young boys and girls are missing out most of their ownership, most of the upside, because they have to give up a large part of their ownership at very high cost, very low valuations. They almost land up losing their company. Right. So I really think that we need to see Indian industry come up. Maybe some of the unicorns put in a little bit of their income or earnings or values into some such fund, as almost as a measure of support to upcoming startups. But the funding winter is more in the mind than in reality. Good projects, good ideas will always have investors. Am I wrong, Prashant? You were here somewhere. Am I wrong when I assume that? Thank you.
So I think you were wearing your other hat. I think most people know that because he holds many portfolios, leader in the House of the Rajya Sabha, but he's also a renowned CA. I think you were the number 2 ranked in the CA exams many years ago. You're also a famous lawyer. So you would actually say that this is not necessarily a bad thing which has happened, the kind of...
Not at all. I clearly feel it's not bad. It will help businesses look for more serious activity much faster. And while there could be a downside in terms of the adventurism reducing or the ability to take risk or to explore new ideas may sometimes get affected. But I do believe some of it is something we brought upon ourselves because of some of the instances that have come to light in the last, particularly in the last 12 months, have not done our sector a lot of good.
Right. So you've also mentioned this fact before, that there isn't enough enough of a large domestic venture capital industry, which, for example, China has, right? And you refer to it again. So why do you think that's not happening? What do you think? Can the government do anything to incentivize creation of such an industry in a way that you've used PLI to promote domestic production in a large number of sectors? Can a similar exercise be taken as far as creation of a funding industry of some kind is concerned?
We can do that. It's not impossible. But maybe a good idea if we can look at a partnership between industry and government. Because it's not government's job to be able to assess a good idea or a bad idea. We'll mess it up. I think it's better we let industry do that job. We have the fund. For example, our fund of funds, it had 10,000 crore commitment, 9,500 already committed, but we've only been able to disperse about, I think, 4,000 odd crores amongst 85 AIFs. I would love to see at least that part of the money move out faster into the market. So, and maybe the Investor Connect initiative could be a good beginning or a starting point.
Right.
So let the message go out from your platform that those who are facing a stress on funding must certainly connect with the Investor Connect program, and that'll give us an idea of where, if at all, government intervention is required.
So one of the points which we discussed earlier, one of the programs in here, was that there is a multiplicity of regulators and ministries which impact the startup sector, right? So we passed the data protection bill recently. There's obviously the old IT Act which is there. There is also a Digital India Act which is coming. But, for example, the TRI is involved in various activities which pertain roughly to the startup sector. And then the Minister of Consumer Affairs, of which you also have a fairly robust interface, let's say, with the startup sector. Do you think, many in the startup sector say that it creates a lack of predictability and creates some amount of uncertainty for the sector. So how would you react to that?
I think multiplicity of regulators is a reality in all businesses. And we can't have a separate ecosystem where we say that all startups will only have to adhere to one law.
Sure.
That would become very complicated if you ask me. But yes, if at all anybody in the startup world feels that this is becoming detrimental to their business, we'll be happy that in the next advisory council meeting, we invite startups to come in and give us their suggestions, give us where they feel difficulty in meeting the requirements of the law. But most of the laws you mentioned really don't hurt startups. For example, consumer affairs, which I look after, that's more about making sure the consumers get a fair deal. As long as consumers get a fair deal, they get a choice to be able to make their own decisions. They are not forced to subscribe to any service. We are okay with it. We are not interfering in anybody's business. And we could come out with a small list of do's and don'ts on consumer protection, which can make it easier for startups. Similarly, data protection is all about ensuring that privacy of data is not affected. I don't think beyond that, data protection laws are hurting anybody.
No, sure.
So I personally have not received any feedback from those whom I keep interacting with that any of the laws are hurting them. If at all, the only thing I've been advised they want more flexibility is things like the employees' stock options and stuff like that. Other than that, if there's any other issue related to the IT industry, we had Rajiv here, very proactive, very supportive of industry. If there's anything to do with consumer affairs, I'm available.
Right.
So please become the bridge between the startups and the government.
Sure. And where are we on the position of marketplaces as distinct from directly selling to consumers? Marketplaces as distinct from directly selling to consumers, which is...
Well, I think There are certain laws of the land. The foreign direct investment laws are very, very clear. They distinguish between the marketplace model and the direct business to consumer model. I wish everybody would just follow the law of the land under which investments have come in. That's all that we are asking. We are not asking them to change anything else. Just stick to the law of the land, which has been consistent all through. Ever since investments started flowing into e-commerce, our laws have been absolutely crystal clear. Those who come in with foreign direct investment are not allowed to participate in the retail space. Those who come in with Indian money are allowed to participate in it as a retail business or like any other mall. Very simple, there's no rocket science in it. You either run a marketplace which is very, very categorically defined in the FDI law, business to business. All the circumvention that's going on is the one that I hope to be able to convince companies to stop. Okay. Why are you looking at only one direction?
No. Which direction am I looking at?
Now 4 people have started looking at that direction.
Okay, we can take a couple of audience questions. Is there, yeah, okay. Can you please identify yourself? There should be a mic.
Hi, I'm Siddharth Pai. I'm the founding partner of 314 Capital, an
Yeah,
early stage VC fund based in Bangalore. So, sir, I would just like to, all of us in Bangalore are very excited to have the startup minister come and visit us, sir. We know that India, I think, has a Davos, but Startup India will always have ET Startup Awards at Bangalore itself. So, sir, my question actually comes with regard to the funding question that you mentioned. Even though your government's the one that's actually given us Atmanirbhar Bharat as of now, and the Indian startup ecosystem has actually embraced this wholeheartedly. We have Indian entrepreneurs solving Indian ideas from India, and few of them from in India itself. But the one thing that's been distinctly missing in the entire piece has actually been Indian capital, sir. We've actually seen regulation being one of the greatest impediments to institutional Indian capital actually coming in. Silicon Valley VCs used to raise $42 million between 1972 to 1977, but the moment they changed the regulations to allow insurance companies, banks, pension funds, etc., to invest into them, gave them an option, didn't mandate them to, gave them an option, the money they started raising yearly grew up to $942 million a year. And in those days, that was actually a large sum of money. But we've seen, even as of now, Mr. Vaidyanathan is here from IDFC First Bank, banks have to take a 150% charge against equity the moment they invest into an AIF or the moment they invest into a loss-making startup. Some of them can't hold instruments unless the instrument pays out a yearly coupon for that matter. Insurance companies are yet unable to invest into AIFs, which actually may have some position overseas, despite their money not actually going outside. Even this funding winter that's happened as of now, it's been exacerbated by the fact that Indian capital, which has been about 5 to 10%, is unable to participate in a meaningful manner. Family offices can't take the place of a large bank, of a large institution actually coming in. So we'd just like to know from on behalf of the ecosystem, what are the steps the government is taking to ensure that larger Indian institutional investors are no longer just a mute spectator, but can actively participate in this entire revolution that's going on as of now?
You know, there's a mindset issue. We've already seen in the past that any losses that occur due to the risks that financial institutions take ultimately fall on the government. And more so because all the insurance companies, all the banks, highly regulated entities, in a way are using public money. They're using public deposits, public money. And I think the public mindset is not yet mature enough to be able to accept greater risk, even if it has the promise of greater reward. I'll give you a simple analogy to help you understand why we, as government, cannot direct the insurance companies or banks to look at greater investments in startups. We have this debate about the old pension scheme and the new pension scheme, which some of you may have read about in the newspapers. The old pension scheme was typically that a government servant retires and is guaranteed a certain level of pension. The new pension scheme is more contemporary, it's contributory with both the employee and the government contributing. And a good portion of that is being put into equity markets, is being put into public investments. So in the expectation that that will give higher returns. All calculations seem to suggest that even as we speak, the money that the employee will get on retirement basis the current valuations will be more than one would have got as per the old pension scheme. But we are unable to get a large part of the employees to accept that, understand that. There's the thinking of security, the security of funding, and therefore they are more comfortable with a government bond which gives them a assured return. The risk-reward balancing is still something which it happens as the economy matures, as people start having a better understanding of financial markets. It will happen. But currently, for the government to be able to tell public money custodians to take this fund will be a little difficult, I think.
Okay, thank you so much. I've been asked to wind this up. I'll request Piyush to stay on stage, and I'll request Suresh Venkat to take this
Thank you,
forward.
friends. Thank you.
Thank you, Bodhi. All right, the next award category is called Comeback Kid. The winners managed to pivot from a B2C business model to a highly profitable B2B business. May I call on founders Mukesh Singh, Raj Pandey and Vikash Kumar of ZobSmart to receive the award. Okay, before you go, I have a question for you. Finish your chat with the minister. All right, what's the toughest thing from going from B2C to B2B? Did you hate consumers or what?
I'll answer that in Hindi, right? They say, क्षमा शोभती उस भुजंग को जिसके पास गरल हो, उसे क्या जो दंतहीन विशीन विनीत सरल हो. Oh, perfect. I mean, how many of you understood it? क्षमा शोभती उस भुजंग को जिसके पास गरल हो, उसे क्या जो दंतहीन विशीन विनीत सरल हो. So let me address that. Literally translate that into English, right? So if you see a snake and the snake does not bite you, he is doing you a favor only if he has a poison. If he is a poisonous snake, then actually it's of no use, right? So for us, right, the migration for B2C, right, was not by choice, right? पैसे नहीं थे, right? So सीधी कहानी, right? पैसे नहीं थे, technology था. What can we do? Let's sell this technology, kind of, right? And I'll just quote Premchand towards the end. मनुष्य के सिद्धांत उसकी निज दिशा पर निर्भर करती है. तो उस समय जब ग्रोथ था, थोड़े बहुत पैसे थे, तो हम भी बता रहे थे ग्रोथ, right? जब पैसे खत्म हो गए, तो सिद्धांत बदल गए कि let's go to profitability, and now this is the one, right? So that's it.
Entrepreneurs and poets, that's what we have for you at the ET Startup Awards. Our next award category is called Top Innovator. This award goes to a company that scaled up a business that aims to solve a very real problem. They convert environmentally harmful gases into end products that, believe it or not, can be used by humans, plants, and animals. The winner is String Bio. May I call on Dr. Eril Subian and Vinod Kumar to receive the award. Hi, Dr. Subian, your startup converts harmful gases into useful biomass. That's all very good. What about all the random gas that startup bros keep spouting? Can you convert that into anything good?
Working on it. That's the next innovation we'll have to do, I guess.
So with that, we'll see you back here next year at the ET Startup Awards. All right, congratulations, String Bio. The next award goes to a company that's all about cats and dogs. The category is called Woman Ahead, and the winner is a founder who built a 200 crore company in the pet supplies business. You just met her, with over 80 physical stores across the country and a strong brick-and-mortar business model. The winner is Rashi Narang, founder of Heads Up for Tail. Rashi, question for you. Thank you, Minister. What's the one thing startups can learn from cats and dogs?
Persistence.
Persistence. Loyalty as well?
Absolutely.
That's what VCs can learn to.
Oh, yeah.
All right. Thank you. Congrats, Rashi. Moving on, our next winner is for the Midas Touch investor. The winner of the Midas Touch Award was chosen by the jury for his ability to take an early bet in the Indian SaaS story. This led to significant gains in his early investments in the companies that he backed. The winner is Jishnu Bhattacharjee, Managing Director, Nexus Venture Partners. Vishnu, regular human beings can survive regular winters with warm clothing, staying indoors and behaving themselves. What kind of clothing do you recommend for startups for the funding winter?
I couldn't agree more when Minister Goel mentioned that actually that kind of winter probably gives rise to best businesses. And we have seen it. I started my venture capital investing in the previous downturn in 2008 and have been fortunate to have worked with, identify and partner with some really phenomenal companies, which later became also public and created great phenomenal businesses. So I think it's the mindset, building business is in the mindset. At the end of the day, not driving for valuation is an outcome, but what you are driving for is creating real values, looking at the fundamentals of the business, what matters across enterprises and consumers. Like, we have been fortunate to back companies like Postman, Delivery, Dhruva, and Zepto. We have all heard Adit today. And they are all, I can say proudly that none of them are being built for hitting any particular valuation within a particular time frame, rather building real value, catering to the users they are building products for, and build sustainable companies which can probably last the test of time. I mean, not just years, but decades. Thank you.
Congratulations and thank you. It's now time for the final award at the ET Startup Awards. To join Mr. Goel on stage, may I invite Mr. Rajiv Chandrasekhar back on stage to join the minister? The winner of the Startup of the Year is a B2B e-commerce company that reported revenues of over 15,000 crore rupees and profits of 460 crore rupees for FY23. Off Business is currently valued at $5 billion. May I invite the founders, Ruchi Kalra, Ashish Mahapatra, Vasant Sridhar, Bhuvan Gupta and Nitin Jain to receive the award. All right, quick question. I'm going to ask Ruchi the question. Ruchi, as our political friends on stage would attest, getting any two Indians to agree to anything is impossible. How do 5 of you agree on anything?
I think we pass the mic, everybody says everything, and then we kind of vote. I think voting is the best way that if the largest democracy can actually work with the voting, I think we can work with voting still as well.
Mythology Pandavas. So Pandavas always win, right? Thank you so much.
Thank you. I don't think we'll agree on even this question, to be very honest with you.
Thank you. Thank you. So can I request you to stay for 2 more minutes?
No, please go ahead. Congratulations to all the winners. Please go ahead. All are coming up. Just one small request, if I may. All of us are selling different types of goods. All of us are in different products. Many of us do e-commerce. One big contribution that we can do for the nation, if I may request,
Absolutely,
if you don't mind, is promote Indian products, Indian-made goods. Just imagine, I was asking Madam who deals with pet food.
Rashi, yes.
Rashi, about whether pet foods are now available in India and Indian manufacturers have started making them. And she said lots. And that just got my mind thinking that if all of us in the startup ecosystem were to start recognizing and respecting made in India goods and at least informing the customer that whatever goods you are providing, the country of origin or where they come from. Are they from India? Are they from our friendly or unfriendly neighbors? Are they from other parts of the world? I think the consumer has the right and he should be given the choice. Should he wish to be a part of Atmanirbhar Bharat? Should a consumer be concerned that he wants to contribute to providing jobs to the less privileged? Maybe as a consumer, I'm happy to pay a rupee or two more, but get a product that helps somebody's gas have food at night, his stove have food at night, or somebody who can pay the bills of his children's education. So I think if a humble request to all of you, if you can start recognizing and reflecting on whatever you are selling, the country of origin and where the goods come from, and enable or at least give an opportunity to consumers to support the India story, support jobs in India, support opportunities for the MSMEs in India or businesses in India. It'll be a humble contribution from the startup ecosystem towards a better India for the
Absolutely.
and a more inclusive India.
I agree with you 100%, sir. Ministers, I'm going to ask you to take your seats for 2 more minutes. We just have a couple of more orders of business. May I now invite Mr. V. Vaidyanathan, MD and CEO of IDFC First Bank, to say a few words. Mr. Vaidyanathan.
Good evening, everybody. It was really a fantastic event once again this year, I think 9th in the series. Thank you very much for all the startups who participated in the program and are building wonderful things for India. When we think of startups, one thing that really strikes everyone is that the startups ecosystem India has created 1 million jobs. Now, what can be more important than that in this country? Number 2 is not just jobs. These are not outsourcing jobs, etc., which are also very important for the country, but these are also creating solutions, whether in the area of logistics or commerce or agriculture or education or medicine or entertainment. Everywhere startups are creating solutions, and creating solutions, new age solutions, making the country more efficient in their own way, increasing efficiency. That is one very powerful contribution startups are doing for the country, apart from creating jobs. And I think it can keep India in the forefront of innovation, and definitely, like Minister spoke earlier, I really think that that's a very big contribution to the country. The third thing is, of course, we all know the startups are bringing Forex to the country, and that's also very important. So, solutions, Forex, jobs, everything, we all agree startups are a really big deal for the country. I'm very happy the way Minister spoke and encouraged the ecosystem, and the way government is giving tax incentives to startups and even working on the ESOP issue. So I think that's all really very much appreciated, the way the government is working on it. Second thing to note is, in our country, the government is not saying that, okay, we are staying out of the way, you do your job, which is itself a big deal from the 1970s and 80s and 90s. But now the government is actively promoting a digital ecosystem in the country, which is also a very powerful thing. We all know that the ecosystem that's got created in the country through Aadhaar, through GST, through the champion of ONDC sitting in front of us. These are all massive ecosystems government is creating for making a digital India and not passively happening through the market forces. And that really is a big deal for any country. For government to make it is something. So, in fact, government is already using its own service in that sense that now our, license is becoming electronic, passport is electronic, death certificate, birth certificate, everything is getting electronic. And I think that's also adding massive benefit to the ecosystem, which all startups are, of course, pinging upon. So, therefore, I think all startups understand that the role of the government is in actually enabling all the billions and billion-dollar unicorns we're making in the country. And I think all of us appreciate that a lot. And thank you, ministers, for making that happen of the government, of all of us. About our bank, since we have the opportunity of talking to you and we are supporting this program and sponsoring this, I just want to share with you something about our bank. Many of our bank has a lot of goodwill from the startups. I can say that I'm saying this with a lot of pride and happiness that our bank after merger had just 10,000 crores of retail deposits, public deposits in 2018. You will not believe it, in 4 years, we have over 1,20,000 crores of deposits in this bank. 10,000 crores to 1,20,000 crores of retail public deposits is something that very, very few banks have achieved, and we believe that this is happening because of a lot of goodwill. I must say, and specifically I'm speaking to startups, I'm therefore saying this to you, that ours is the only bank, mind you, I'm using the word only bank in the country, which is giving monthly credit on savings accounts and is important, and giving zero fees on every transaction on savings account, like NEFT, RTGS, you can name it, cash deposit, cash withdrawal, SMS charges, everything. So it's something special. That's what I'm saying, something opportunity having you with us. Please have your relationship with us. That's the only point. And I can say that, we're the only bank which is actually converting current account to fixed deposits automatically and switching it back without asking for a fee. So these are very special products brought by the bank for startups. We actually, this is for everybody, but some of this specialized for startups. We're only bank which is actually giving I can't say the word because I'm not sure the only, but I can say that giving startups zero balance accounts for 3 years. Again, something special for startups. We have a startup boot camp. Short point is we are big supporters of startups. We really like to see all of you. We're really very happy for your success. And our bank is with you, and we will try our best to make things happen for you. And once again, on behalf of, thanks to ET, thanks to ministers for the support, and thanks to all the startups for bringing such glory to India. And for this 19, 21-year-old who spoke today, Zepto, a wonderful man, great job. We're proud to see you all. Thank you, guys. Bye.
Thank you, Mr. Vaidyanathan. Thank you very much. Thank you, sir. Just 2 more minutes, sir. No, not the minister, sir. Right, may I request all of tonight's winners to come up on stage with your awards for a quick photo op with the ministers. May I also invite Satyan Gajmani to join the 2 ministers. Satyan, can we have you on stage as well? All the winners with your awards, can we have you on stage? While they assemble, a quick word of thanks once again to our sponsors and partners. Our presenting sponsor, IDFC First Bank. Our workspace partner, IndiCube. Knowledge partner, Traction. Telecast partner, ET Now. And hospitality partner, the Leela Palace, Bengaluru. If you're going social with any of the photographs or content, please use hashtag ET Startup Awards. I think you need to bunch more towards the center to get into the photograph.